Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and here we are on Monday, the 12th of December, 2011. You know, I'm sitting here with my phone. I can tell you how I keep up with the markets when I'm out of the office, and I just want to show you this. These are some of the quote pages we have. You can come down and hit other pages through here, and you're going to be able to see the videos that I play with. Different prices will flash up and down in here. And this application, and by the way, here's the news, so you just get to see how the news stories come in. And I don't know how good that's coming, but you'd hit them, and they'll flash up and show you what's going on. And I'm able to keep up with the markets. The difference between what we've done and what so many others have done, we did not make this a download applet. This is a web page. And we built it to work in your phone, and you just keep the page so you're not sitting there worried about does it work or doesn't it work for me. And the nonsense with does it work in Android, does it work in Apple phone, does it work in this one. If you can open up a web page, you can work with this applet, and then all I did is hit save, and I saved the opening of the page right to my phone. How do you get this? And it's free. It's my Christmas gift to everybody. You just go in and register, and it's going to be free to you. Hit the word free, 30-day trial, but I'm not just giving you this. I'm going to give you charting software, I mean robust charting software, I think you'll like it, that is web-based. So if you're sitting, I don't care if it's a Mac computer or a PC-based, it should work. Anything that will work with typically a internet function and brings up a web page should work for you. And between the phone and this, free gift for you to try out. I don't want credit cards. I'm not interested in any of that. You can come in here, and if I can get this to operate right, I don't think I can right now, but you slide down the page, you put in your username, choose your own passwords. You're going to get an email, cell phone provider. We need that in order to get messages out. You'll say, what kind of messages? Well, when I put out my videos, one of the things I'll be doing in January is I'll put out a message on this, and instantly it can come up as an HTML message, not even a text message if we want. So there's many, many new features that I'm coming out with, and it's my gift to all of you. The market didn't give us much of a gift today. If you look at the market, the dollar index was up 90, the euro down 185 points, almost 2 cents. The gold market down $50, got up last night to 1860, and then fell from there about $60. So where is gold? Well, gold looks sick right now. The gold market has a pattern of, at this point in time, lower highs, lower lows. That is not good. The market looks to me, as you can see, that it's breaking down, and I marked down here this July 31st close of 1621.70 because it won't take much to attack that close again, and that is the number that I think the market will close higher than by the end of December. We'll see if I'm right or wrong. But this market is pulling back, and if you just look at what's going on here, this was the 1765 area, 1760.50, lower highs. Once you took out 1705.70, and I hate to say this, but this happened on Friday when it hit 1704.90, I was beyond disgusted. And I think if you saw the videotapes, you saw that. And I went, darn it, now I don't know what's going on. But the market has broken its chart pattern. And if you don't stay disciplined, what happens is you walk into this. And once the pattern was broken, it was broken. Then I'm looking at where is the market at in relation to the 18-day average of closes. Let's go back to Friday. It couldn't stay over it. That's terrible action too. So I've got lower highs, lower lows. You're bearish. And here's what happened today. Where's some objectives for the market then? Well, first thing I do is start adding other moving averages. The 45-day average in the blue, and in the green, that's what I should have been pointing at, was the 100. You didn't need today. You were under them all on Friday. So this became very disappointing in the market. And just so you'll know, 1728.90 on Friday was the 100-day average, 27.90 the 18-day, and 1719 was the 45-day. And I was a guy that was hoping this market was going to get through 1760.50 and take off. It didn't. So immediately what you do is you go into the mode, okay, it's a bear market. And I know you'll find it hard to believe that you think that fast, but that's what you got to think. So no moving average I'm using is going to offer support. What could offer support? Regular watchers know that the next thing I would go for is the Bollinger Band. Now, the Bollinger Band, is shown right here, is a pair of lines. And the lines are made up of an algorithm. And the idea here is the market will not stay above or below the black lines more than 2.5% of the time. 5% total, but 2.5% under, 2.5% over. Just recently, it tried to stay under, did it for 3 days, popped right back, as you can see. Where did you fall to today? This was the close Friday. Market said 1674.60 before the first print was put out. Remember, as you get a print, everything here is live that I'm doing. So the first print moved down probably to the 1670s, and as the market broke, it got a little lower. Came in today at 1668.90 by the close. You closed 1668.20. So you're going to say, well, what would you do there? Well, first off, if one were short, that's an area you start lightening up on shorts. Yeah, it doesn't mean you're getting bullish there. The number that I like on the bullish factor is already what you know, and that's that 1621.70 if you get down there to start looking. Is that overdoing the market? You're not overdoing it here. This is just a get-me-out zone, and you're oversold. You've hit the red line at 29.24. You can get a bit more oversold than that, but the slow stochastic study still has downside momentum. I don't see any reason at this point to consider long positions, and if 1621.70 were to give ground, got to be careful that you don't go back to the 1535 level that we made way back when. I think that was in the August time frame. The silver market, looking ugly here too. You can see the lower highs, lower lows. Last night I was looking, and this was where you finished on Friday, at going short for clients, telling them to go short, and I wouldn't have done it. I would have told them 32.43. And the rationale was, well, what would my risk be? Be right over the last rally high of 33.30. Unfortunately, the risk then, even with the mini contracts, is going to be about $1,000. And I said, nah, it's too much money, but the trend is down, and I'm going to look for the Bollinger Band as a potential move. You haven't hit that yet, like you did in the gold. You're shy of it right now from the close at 3,100, roughly, about 24 cents, and you're oversold. As you hit it, I'd be telling people, come out of the shorts. And the next rally is going to see resistance, in my opinion, at 32.23. You need Europe to do something, not what they're doing in order to get these markets going. What they've done is nice for a long-term class in college where they're saying, oh, down the road we are going to have this agreement that you have to abide by and it's going to give us fiscal union. That is proper. But what about today? What about January? What about February? Financial markets, they're like vultures. They look to see a weakness, the marketplace, and it goes for it. It's almost like trying to support a currency. You can intervene, and you can change things for a brief period of time. The word is brief. The market comes back and challenges the market after that, typically. I can't speak that all the time everything does what it does, because there are differences. But I'll talk the generalities. And the generality in this case is, what did they do to solve the debt problems facing them right now? Did they give the ECB any reason to step forward out of that European agreement and do something now in buying more bonds and pull out their bazooka? I don't think so. In fact, the opposite. I think the agreement that they came up with told the ECB to sit back and let things, unfortunately, get a little worse so that the countries move quicker, and that prods the stragglers along. That's the problem that I see out of that. In the platinum market, it's a classic case still. Lower highs, lower lows, embedded stochastic. Even now with the seasonals turning up, the market's refusing to go anywhere. Then you come to the copper market, which is now neutral. You're back into that game that I so often talking about, where the market, it's like a pinball machine, and eventually you get to the point where the market has to correct, and you got overbought, you've turned down, and the 18-day average is that zone now where I'll call it a neutral market. This is the cotton market. Look at how bearish this market suddenly got. Now, this makes up T-shirts, linens, everything. It's not an industrial metal, but it's an industrial product, one that we all use in our life, and these prices just keep coming down. This market's still very, very bearish. I've been warning you that cocoa one of these times is going to spin and it's going to go move at a dollar at a shot. And that's what happened today. Market made the lower low, so we have what's called a key reversal on volume, and the stochastic managed to close out of embedded. So I'm targeting wherever the 18-day average is. Today it's 23.06. Day after it'll be another number. It was 22.26, falling about 20, 30 points a day. So I'm going to expect tomorrow it's around 22.86, and I think the market over the next several days will hit that and, like that pinball machine, reset itself and try to figure out where to go. Today was one of those hard days because I think the smart money was on the sideline waiting to see how Asia was going to respond and Europe itself to the European agreement, and it wasn't pretty. We'll see if we get Tuesday reversals tomorrow, which is pretty much what I'd expect. But I think the trend is set, and I think the stock market's in trouble at this point, and I don't have a lot of hope for gold. I'm Ira Epstein. Have a